And joining us today, he is the Senior Beef Analyst at RaboResearch North America. Lance Zimmerman is with us. Lance, great to talk with you again, man. How are you?
I'm doing great. Thanks for the invite, Jesse. Happy to be on Market Talk.
Well, I appreciate the time. Thanks for joining me, Lance. And your new role, I should say, with Rabobank, RaboResearch. Talk a little bit about this new position as Senior Beef Analyst here, real quick, before we jump in, Lance.
Yeah, I'm excited to be here. Literally, as I mentioned, as we were kind of just getting connected here, I'm 50 hours into this new position, so it's like drinking out of a fire hose, as I like to say. So we're learning a lot, meeting the new team, getting a handle on the data sources, all your typical new employee orientation. And so I'm sure some of your listeners can relate to the chaos that comes with that. But this team's really cool. The reason I decided to take this opportunity that was given to me and work with this team is the people. I think anytime you get involved in one of these situations, people's a focus. Our business is built around it. And so they have a neat team. They have 20 researchers on kind of the North American team that span everything from boot on the ground production ag to consumer goods and trends and everything obviously in between. And so that's really exciting. Then you layer into it the fact that their global research team is 75 people. I get the chance to interact with people in China, Mexico, Brazil, Australia, Europe, obviously, where the home company's located or main company's located. And so it's the size, the scope of the opportunity that's here is immense, and the opportunity then to leverage those resources to help the industry better understand how to navigate going forward is what it's all about. I'm excited about it.
Well, congratulations again on the new role. And I know, of course, you have years and years of experience, so I know you're hitting the ground running. Let's talk a little bit about the beef market. Let's talk cattle just a little bit, Lance. And I think overall, there's a lot of things to consider. We have inflation, of course, in the markets. We are watching, what's feedlot country looking like? What's our supply looking like out there? I know top of mind, cattle on feed report, cattle inventory report coming up on Friday. As you kind of look at that report here ahead of things, what are you anticipating? Will we see any surprising numbers possibly with those reports coming up here on Friday?
Yeah, one of the things I love, Jesse, you mentioned surprising, even at CattleFax in my time there, I'd love hearing people call me on the phone and say, okay, what surprises should we expect in the report? And I would joke with them and say, well, by their very nature, if I knew what the surprise was, it wouldn't be surprising me, right? It's like when you know your surprise birthday party. But no, as I kind of say that in jest, I think the biggest thing is we all expect supplies to eventually tighten up. And I was having a discussion with somebody the other day, and they said it's really interesting. You've not changed positions. You've been known as somebody. You find a role in a good company, you tend to stay there a while. You started at CattleFax 12 years ago. That was 2011, and we were just on the front end of a major drought that then carried us through 11, 12, 13. It took us until kind of late 13, early 14 to kind of flip the cow herd the other direction. The sentiments that existed through that early tenure at CattleFax to where they are as I start this new position at Rabo are very similar. You have guys sitting here staring at each monthly cattle on feed report every Friday afternoon that comes out each month and sitting there saying, when are we going to run out of cattle, right? We've been in 3 years now at cow herd liquidation from the 19 highs. Everybody's just sitting there wondering, when are we going to realize that? And I think my message to your listeners is it's probably going to be in these next several reports. I think this cattle on feed report, the ones that continue through this summer, the cattle inventory report, you're really going to start to realize, okay, this is getting some legs under it. In other words, we had that supply so backed up from the feedlot all the way back down to the cow-calf producer after the pandemic that it took us really until last winter to kind of get back to normal. And then after that, we had such a good cattle feeding winter. Plus, we had all those drought placements that started hitting us last year that we've had adequate feedlot supplies, adequate fed slaughter, and then all this additional cow liquidation happening over the last 12 months. So we've not really been in want of supplies. We're going to start to see that trickle into feed yards this summer. That's going to start to realize itself on beef production and fed cattle slaughter as we get to the later parts of this year. And then Cow slaughter, it's at a record pace. We kind of talk about a word called culling rate, and how we come up with that number is we look at the annual slaughter, beef cow slaughter number, and we compare that as a percentage to the January 1 inventory. Basically, how many cows did we slaughter from our January 1 inventory? We're on pace for that number to be 13.5%. To put that in scope, you kind of got to get that number down around 10% or below to be an expansion category. So we're 3.5 points off of that. But even that said, the previous record high on an annual basis was 12.5%. We hit that twice in the last 50 plus years. We're going to crush it by a full percentage point this year. So we're going to start to realize cow slaughter. It's still going to be a big number, but it's going to slow from the pace we've been on here lately too.
Well, and I think, Lance, a lot of analysts I'm talking to lately, it sounds like you might be in the same camp as we hopefully, presumably, tighten up cattle supplies. A lot of folks are friendly the cattle market as we move into the fourth quarter. I mean, we're seeing, feeders around that 180 range, live, fats are anywhere from mid 130s to even up around 150. It feels like there's a lot of folks who are friendly and think that there is some upside potential in both those markets here as we get into the fourth quarter.
Yeah, that's what's wild. I think, all of us need to have on our radar screen that there's a heightened risk of some demand erosion due to recession risk, inflation pressures, consumer spending pullbacks in general, even though we haven't seen them on a historically significant level today. The year over year reductions have been pretty significant from a demand standpoint. But again, if we think back to last year, a lot of the food service segment was still reopening from COVID shutdowns. And so restaurant demand was really propping up the beef market. Retail was strong and competing with food service a year ago. Exports were strong. There's a reason demand was at a 30-year high last year. And so as we think about this year, it's certainly been a significant pullback from all the positive headwinds of last year. But even if we have a demand pullback, and not just from where we are today, but we have a significant pullback again next year due to demand erosion and recession risk, the supply correction that we're about to see will still allow prices to trend upward. Maybe it's not explosive, but it's still going to be very significant. So you talked about the feeder market. We're still going to put in our seasonal highs probably around Labor Day, but we're probably not going to see as big of an aggressive break on the backside of those highs. Calf market, we typically go into fall lows. We're going through some pretty significant price appreciation now. If the summer video sales are any indication, that feeder market's going to hold itself together a bit better through this fall run than maybe what we think. And then likewise, cull cow market, fed cattle market, all those numbers are going to be very well supported from a price standpoint with those tighter supplies as well. So demand has some room. It can still work a little bit lower, still be historically average to above average. But with the supply pullback we're going to still see a very healthy market would be my expectation.
And I think as well, talking demand, we look at consumer demand. Obviously, inflation's played a big role in everything here the last few months. We've seen more consumers maybe go for cheaper cuts of beef at the grocery store. But on top of that, we think export demand as well. That's another factor that has remained fairly strong. And I think China, I saw some numbers here earlier this week. This China beef demand has really kind of almost exploded here in recent months, Lance.
Yeah, I mean, China still, it's funny. You have that type of population base, any type of increase becomes on the back end a huge number, right? And China was huge for us last year as we navigated through the spring and summer, even into the early parts of fall. They were importing briskets. They were importing fed trim. They were importing your kind of traditional chuck cuts. And then obviously all of the variety meat type items. They kind of were a little sleepy through the winter here. I think once they got their buy lined up for the Beijing Olympics, then they hit some COVID issues. Obviously their Chinese New Year, things kind of slow down, but they've been picking up again as we've gotten the data for spring and early summer. And so as we look at where we've really seen our export growth for this year to date, it's been China, it's been South Korea. Those are still two very strong markets in terms of their growth markets. They're not mature. The U.S. market, our domestic consumer, that's a mature market. We can still make gains there, but we got to temper our enthusiasm because they're going to be incremental. Same thing with Japan. Obviously, it was a huge market for us through the early 2000s and even coming out of the latest recession. But again, it's more of a mature market now. And so when you look at where our big export growth has come this year, it's China, it's South Korea, and then actually it's those countries that collectively are all outside of the top 10, very small markets compared to the top 10 markets. But collectively, they've been carrying a lot of water. And so as we look going forward, I think, and we think 2, 3, 5 years ahead, the thing that excites me the most about growth potential in the U.S. cattle industry is what we can do to become a more global customer, a more global supplier. That's what the pork industry's done. That's what the poultry industry's done. And certainly it comes with its fair share of heartburn and headaches as you navigate through the multiple political layers and logistical layers that exist there. But those are where the growth opportunities lie. And we got U.S. beef demand on a solid trajectory. Getting some more growth going forward to fuel that next expansion out of the global markets is going to be key.
And I wanted to ask as well, just with the inflation we've seen here in the US and really across the globe, but specifically here in the US, and more of this talk of a recession, do you think that still could be a weight overall on the cattle markets and on beef demand here domestically as we move forward, if we do in fact enter this recessionary type period that a lot of folks are calling for?
Yes, it's got to be on our radar screen. One of the interesting things when you think about the beef market is we really have in our domestic market what I like to just overly simplify perhaps, but call a two-tier market. We focus a lot on high quality, grain fed, well marbled beef. That's what we do best. That's what we can produce on a global basis, the most economically. And we have a consumer that, quite frankly, has responded to that better product. They're getting a better product today at retail, at food service, almost by accident. You think about the millennial Gen Z consumer, every single year they're consuming the best beef that we've been able to produce in their lifetime. And that's a pretty novel concept to think about. But to realize that higher quality, you're buying middle meat items, as we call them: tenderloins, ribeyes, strip steaks, T-bones, porterhouses. Those are obviously a lot higher price point. And so when we think about the inflationary pressures that we're going through today, one of the common things that you hear over and over again in the press is inflation's attacks on the poor. And so that's what we got to think about in this environment. I mentioned we're a two-tier beef environment. I focused on the one tier, that's the higher quality segment. Inflation's not going to affect demand for those products as much as we think it is, because those folks had money enough to buy it before the inflationary pressures. They may pull back a little bit, but they're not really going to trade down. There's not a great substitute for a prime rib, right?
Mm-hmm.
But the area we do need to be concerned about as cattle and beef producers is that second tier, which I haven't even talked about yet, but it's essentially ground beef. And what a lot of your listeners may not understand, a lot of folks I talk to in the country don't, is if we consume 55 to 60 pounds of beef as an average U.S. consumer on a year-to-year basis, 60% of that is roughly ground beef. And I know at first you kind of pause, and it's almost jarring, but sit back and think of how many hamburgers you've had in the last couple of weeks, tacos, stews that may have ground beef in them, obviously soups. It's endless. Spaghetti, right? Lasagna. Ground beef is so versatile, so convenient that it doesn't take long, and you realize, yeah, okay, 50 to 60% of my consumption is ground beef. I get it, right? And so that's the segment we got to watch out for, because in that area, we're competing against some substitutes. Pork, poultry, right? Pork chops, top butts, ribs, chicken breast, wings, all of those items. And so going forward, as we think about inflationary pressures, I'm really focused on that ground beef and trimming market. Obviously, the end meats, by their very nature, start out as roast and stew in the meat case. If they don't sell well there, they become ground beef and they move them out the store quickly. That's what we got to watch. Today, the retailer's pretty good about offering very good price discounts for those products. They're advertising them well. They're staying price competitive with pork and poultry. And I think in this environment, that's all we can ask for.
Well, fantastic thoughts, Lance. Before we run out of time, real quick, anything else we haven't touched on today?
No, I appreciate talking to you. Always have a great time on your program, and we need to do this again.
We definitely do need to do this again, and we will make this happen again here very soon. But I appreciate the time as well with that. Senior Beef Analyst at RaboResearch North America, Lance Zimmerman, thanks for joining us here today, and have a great week.
Hey, thanks to you. Same to you. And thanks to all your listeners. Appreciate y'all.